Hello, everyone. This is the weekly market summary for all things money. If you're looking for what happened this week in the market, you're in the right place. This week is ending August 8th of 2025. And let's just cover a few housekeeping things here regarding in the market. The market this week advanced and it was basically gains from information technology and consumer discretionary. The S&P rose 2.4% this week, and it was led by technology and consumer discretionary stocks amid better than expected earnings and growing expectations for a Federal Reserve cut in September. The S&P ended the week on Friday session on August 8th at 6,389.45, bringing the quarter to date gains to 3% and the year to date growth at 8.6%. The market is expecting, and the odds actually have gone up for a 25 basis point cut by the Federal Reserve in September from 80% a week ago to 89% as of late today. And that 61% a month earlier, that's what it was sitting at. So basically, we've almost up to 90% for a 25 basis point cut by the Federal Reserve in September. That's what the market's kind of expecting at this point. Let's take a look at the charts for this week. Just kind of quick walkthrough. We are kind of getting a little overextended. We are seeing still a wave 3 up pattern here within the S&P 500. This could potentially go higher, but we also have to be concerned that if this trend line gets broke, we could be going lower. And what signals this is this divergence pattern here with the trend lines going higher to higher highs or higher lows here to, this, it kind of creates this big jaws pattern, I like to call it, a big fish pattern. And basically, if this gets too overextended, what you're going to see is this clamp shut. And that's what the market will probably want to do. Whether that happens in the next month here, it's hard to say. I would think if the market doesn't get the rate cut it wants, or that it's kind of forecasting in September, this may get broken and we might be going down. But time will tell. Let's go on to the Dow. The Dow itself, or the DIA, is looking in. It's still it broke its the former high, and now we've backed off, and it's still projecting to go higher in kind of the 460 range. But we also do have some of the same kind of divergence here that we saw on the S&P 500 or the SPY. So what we see here is we see this market kind of creating like a jaws pattern here, and if the market reacts to some bad news, we could see this going lower and basically closing itself down, or closing down and going a little bit lower. So be prepared that the market could want a correction here in the near future. The QQQ just keeps rocketing higher, but you kind of see the same similar pattern here of the divergence that we're looking at. So if this trend line gets broke, look for at least probably a gap fill here of the May-June gap that it has here to fulfill. If we go to the IWM, we kind of take a look at the small caps. Small caps are kind of signaling the same type of pattern. So we are building this pattern market wide, and it usually is not a good sign if that's seen. So we could be going lower in the next 30 to 60 days. So just be prepared. If we go on and take a look at the VIX has actually gone lower, And so that itself is actually signaling a market to go higher. So lower VIX usually means there's less fear in the market and the market will keep climbing. We'll see where this all takes place. It looks like we had broken above this down trend line here, but this really doesn't mean a whole lot in the VIX. But now we're back below it again. So does this want to go back down and kind of hover, in the low range here where we've been for quite a few months? We've been going sideways pretty much. If we take a look at the TLT, kind of takes a look at what the bond market has been doing. We see that the bond market overall has been going sideways. It's been going up and then down and then up. Now we're in this up pattern here, and then we kind of gapped lower here today. But just remember, as the TLT goes down, that is inverse to rates. So is the market actually predicting that there won't be a September rate cut? I don't know, because if this goes lower, it's signaling rates should be higher or going higher. So keep this in the back of your mind, that the market is maybe kind of foreseeing that the Fed will stay put. So we will kind of see where that leads us as well. If we go on to gold, we can see that gold has kind of just been going sideways here, doing a whole lot of nothing. Kind of broke this ascending triangle here to the downside, but now it's going up, testing the backside and kind of riding this. So is this actually forming a different pattern? Maybe it's forming maybe a little bit more of a channel, back and forth instead of a ascending pattern. We'll see whether this breaks to the upside, touches the top here and kind of gets resistance and then heads back down, or we break out and break higher. So that could be either scenario there. If we take a look at silver, the SLV is signaling more of a wave 4 push higher to this tap box up here, kind of in the $40 area range. Just be aware that we are also seeing a little divergence pattern here, not quite as severe as I think in the actual regular markets, but we are kind of seeing something along those lines as well. We've seen some correction already take place here within the silver market, so whether that is enough to kind of negate this alligator pattern or this Jaws pattern, I like to call it, from taking hold until this goes up and reaches the tap box, I guess we'll see in the near future. If we kind of take a look at oil here, the USO, it's just been kind of doing a whole lot of nothing. We've basically been moving lower instead of higher, so we're basically in a sideways range here, probably anywhere between the $72 and probably the maybe high end, maybe around the 81 range. But the market's still predicting, the algorithm here is still predicting a move higher to this wave 5 tap box up in the $90 range. So just kind of be aware that that could potentially be taking place in the coming months. If we look at natural gas, UNG has made that kind of more of a push lower. We'll see if this low holds. If it breaks, we could be going lower. And if we go past this wave too high or too low, I should say, expect even lower after that. But I would hope, just looking at this pattern here, that this wave 5 has found some sort of support to the downside and we should be heading back up. That would actually fall into the seasonality of this type of year. The coming months will be getting colder in the most regions, or the northern regions, so more natural gas will probably be used as forecasted, usually to heat homes. So just kind of keep in the back of your mind that this probably is creating a low here, and we will hopefully see this moving higher. Again, time will tell. We'll see where this goes. We take one last look here at the dollar. The dollar is also showing that if this trend line, this upwards trend line, does not hold, we will see a move potentially lower to the $92 range here. Over the last few weeks, we've been moving higher and creating higher highs and lower highs. So overall, this is a positive type movement, but this does have to continue higher. If this trend line breaks, we will probably be testing this wave 5 low around the $96 range. And if that breaks, then this algorithm is going to be correct and fulfilling that we're going down to about the $92 range. So any questions, comments, concerns, leave those in the comments below. We'll answer them as we get them, and we'll try to have, if there's enough of them, we'll do a summary next Friday and kind of answer your questions. Otherwise, we will answer them individually as we do see them. So please leave them in the comments below, and have a great trading week and a good week ahead.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.